Our new US Treasury data shows three BRICS economies, India, Brazil and China, sharply reduced their US Treasury holdings in September, cutting a combined $29 billion. While India led with a $16.7 billion drawdown, followed by Brazil at $11.8 billion, while China trimmed another $500 million, continuing its multi-year reduction. Well, the pullback comes at a time when the dollar is already under pressure. The dollar index has fallen by over 10% in 2025, one of its steepest annual drops in 2 decades, before a mild rebound recently. Global banks say that the sell-off reflects a mix of lower US yields, shifting reserve strategies and early signs of de-dollarization among emerging markets. Standard Chartered notes that de-dollarization is real but gradual, driven by Washington increasingly using the dollar for political leverage. And at the same time, turmoil at the Federal Reserve is eroding the dollar's yield advantage, making other currencies and bond markets relatively more attractive right now. JP Morgan says the dollar share in global foreign reserves has slipped to a 20-year low, while foreign ownership of US Treasuries has declined over the last 15 years. Commodity markets show the clearest shift, with a growing share of energy contracts now priced in non-dollar currencies, reducing structural demand for the greenback. Economists say that this shift is not about the dollar's collapse, but a rebalancing of global financial power. India and Russia have agreed to expand local currency settlements, including rupee-dominated trade, to reduce dollar independence and address trade imbalances. While historically periods of dollar weakness have supported emerging market equities, a trend that global banks expect to continue if the dollar's slide extends. Analysts caution that while the dollar remains dominant in global trade and finance today, the combination of geopolitics, valuation and monetary policy suggests that the greenback may be heading into a multi-year phase of mild structural decline. The fresh wave of analyst speculation is once again putting the proposed BRICS unit currency back in focus. There is still no official confirmation from the BRICS bloc, but discussions around alternative trade settlement systems are gaining traction across member countries. Analysts note that the unit proposal, a potential gold-backed currency used for cross-border trade, reflects a broader shift among emerging economies seeking to reduce reliance on the US dollar. Meanwhile, Donald Trump has been on an offensive against BRICS for ignoring the dollar. Calling BRICS an attack on the dollar, Trump said that potential members were told that if they want to play that game, the US would respond economically.